Hey traders, Raghee here. Two ideas as we go into tomorrow's FOMC meeting. One, the rate hikes are largely priced in. When we take a look at the November 2nd expectations for where target rates are going to be, 0.75 of a point. If this column is over 80%, this is as close to fully discounted as possible. And this is not the surprise. Now, it doesn't mean that the press conference can't yield some interesting surprises, but we can measure what the surprise is by moving from the November 2 target rate probability link to the May. All right, so this is the CME Group's FedWatch tool. You can just Google CME FedWatch tool if you want to take a look at this link. It's free, it's awesome. It's the easiest macroeconomic indicating tool out there to understand what we are expecting from the Federal Reserve. Much better than anything they say, much better than anything they do. The worst, quote unquote, worst case scenario, the highest target rate probability seems to be fairly consistently 5 to 5.25. That means we, to some degree, expect this. Anything less is bullish for equities. Anything more is bearish for equities. That's really it. We know where that pivot is. That's the expectation. Left or right, left is good for equities, right is bearish, bad for equities. When we peak and plateau at say 5 and 5.25, maybe 4 3/4 to 5, wherever it is we peak and plateau, the more certain we are that that's where we're heading and that's where we're stopping, equities can finally breathe a sigh of relief. And this has been pretty consistent, that expectation for 5 to 5.25. Now let's talk about volume's role in all this, because what's really interesting is the number of times the equity markets have gone down to new lows, right? And this is where sell stops are run. Now, I'm not being that in any insidious way. There's stops waiting there to get short on new lows. That's as old as the markets. That's just the way that momentum works. And then once again, as that level is broken, again, sell stops fire off. Sell stops fire off, right? And then we bounced. And then what happened to those buyers? They got quite literally squeezed. That journey higher, well, that's a 38 minimum 37 to 3,800 move to nearly 4,300. That's a big move at $50 per point in the S&P. Then we come back down and make a new low. Now, I don't know, and I'm not going to presume that some traders did or didn't take that journey, but I would presume to say most traders didn't. You know, do the math on roughly 700 points at $50 a point. That's a $35,000 scenic route. All right, so then once again, here's the lower low, and sell stops are run, sell stops are run. And then another smaller squeeze this time has ensued. What now? What is the resistance to the upside? What is the resistance to the downside? Gang, I'll tell you what, it's not price. Price is not going to help us in this journey. It hasn't been accurate so far. You might say, wait a minute, Rog, we don't trust price. Remember, price is a one-dimensional look at the market. Markets are 4D. Price, volume, volatility, time. Ultimately, what's going to happen is we need to see some other price level break. Now, back then, it was this -3 standard deviation. That's what held. And you can see that -3 standard deviation held through the May sell-off. It held through that second push in June. And it's that second push in June where on July 7, I said, look, we're holding. We're moving to a neutral environment. We should look for an upside. And this is what I expect it to be, a bottoming process. Not a V-bottom, not up and away to new highs, simply a bottoming process. Bottoms are built on a process. The process is going to be price. The process is going to be volume. It's going to be better data. It's going to be better earnings. And it's going to be, most importantly, as we talked about earlier, when does the Fed peak in target rate probability and plateau, right? Okay. The idea now that this support is going to be retested could be true. Absolutely. And you might say, okay, Rog, where would that take us if we were to retest this low, 3,200. I'm not saying that these things are impossible. I'm just saying that there's a path to this level. And yes, we could get down there, but what's in the way? What's in the way is the -2 standard deviation. So on the way to a -3 standard deviation move, we need to get through the support of the -2. The -2 standard deviation, you can see how well it's worked. Here, 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 right? So until we get through that level, I'm not going to talk about 3,200. We need to break support to get down to the next level of support, right? This has been working very consistently, that -2 standard deviation. All right, what about to the upside? Where's the resistance? The resistance is sitting at the mean, gang. Doesn't mean that we're going to reach 4,100. It simply means that's where resistance, based on volume, is waiting. All right, the last time that we tested this was right in here. That was right in there. That was that peak in September. If we get up to that level, I will absolutely expect sell orders to be waiting. Limit orders to sell, again, absolutely to be waiting. There might be some buy stops in that area, but the bears should win that battle at that mean reversion, 4,100. And then we likely will find some zone between the mean and the -2 standard deviation. The mean and the -2 standard deviation. That means we're going to continue to sort of go back and forth. And that's what I believe a bottoming process looks like until the Federal Reserve is done. Right? Now, we have non-farm payroll coming up on Friday, which means if the jobs data is weaker, equities are going to like that. Just like you saw today, ISM numbers tipped over that all-important 50 level, and the market sold off. If that's good, why weak stock market? Why weak indices? Because good data is bad. Anything that says the economy isn't falling apart under the weight of Fed rate hikes is going to allow the Federal Reserve on their current trajectory. That pushes us further away from the much-awaited Fed pivot, right? So that's why bad data moves us closer to the bad, meaning bad economic reflection of the current state of the U.S. Data moves us closer to a Fed pivot, while good data moves us farther away, and the equity markets respond in kind. Volume is the way we add that layer of depth. Now, this is on the daily time frame. I've been doing the same thing on the intraday. You might say, Rog, you can look at this stuff on the intraday? Absolutely. Absolutely. So if you want to see what I've been doing since mid-June, day trading has been the way that I'm dealing with what's going on in 2022. It's been the best way, quite frankly. There are things we can do on the daily, but they're far and few between. The idea that the daily is our edge from a time frame perspective really just right now isn't true. But if we know how to read volume in a 5-minute, we can read volume in a weekly, we can read volume in a daily. So come check out how I read volume. We've had a 72% win rate in the alerts that we've been kinds of trades that we're doing in the Sector Secrets Mastery Room and the Simpler Futures Room. A lot of you have been the beneficiary of those trades. I want to make sure everybody understands this is a gear that we need to be able to shift into, and that is the short term as well as the long term game. So in the 2 webinars that we will have done last Tuesday and this Wednesday, tomorrow at 8 p.m., we will have covered not only the moves on dailies and weeklies, but also now the moves on the intraday. So this is 8 p.m. tomorrow, Eastern Time, 7 p.m. Central. I will see you all tomorrow. Really looking forward to it. Got a lot of folks registered for this, gang, so I really want you to know what's going on here because this is going to make the difference. It has been making the difference. I'll show you all the trades tomorrow. All right, gang, be good to each other. Thanks as always for the feedback, the comments, the questions, and the thumbs up, of course. All right. Talk with you soon. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.